Good day to one and all. This is Dr. Sivaraman of inoindices.com. Hope you are able to hear me. Let me display the PowerPoint presentation. Asian session live market analysis on January 10th between 5 and 5:30 GMT. We will review the market using the live market code page. I will give the link for the same. You can open it in a browser. I'll also focus the camera over that of the live market code page. Now you can see Euro is trading around 1.2907, 1.2909. The low was 1.2860. There was a quick downward stop and below that of 1.29 area, and then they have quickly gained before 2 GMT, and then they are holding above that of 1.29 area in the case of Euro. And the high was 1.2929, and you come across 1 pip positive net change now. So in the case of Euro on Friday, they gained the levels to 1.30 and quickly dropped it to 1.29, inducing all the long holders to become uncertain and panic, liquidate the long positions. The players have accumulated the positions. We will come across their intentions revealed today when they gain the levels in the case of Euro. And in the case of GBP, they gained the levels and they did not drop it from there. 1.5544 is the current level, 1.5548 is the ask, 1.5509 is the low, 1.5567 is the high. We come across 00 pip net change. That means it is almost around the same level on Friday close. They made a brief downward sharpen, but they did not go below 1.55 area. This particular action, they have done it mainly to drop Euro GBP, which has come to that level of 0.83 area from that of 0.84, 85 and 86. So from there they quickly dropped Euro GBP, and before that you would have noticed that GBP was trading around 1.53, 1.54 area, and Euro was trading around 1.31, 1.32 area, and suddenly they reversed and they gained the levels in the case of GBP and dropped the levels in the case of Euro on Friday. As a result, you find Euro GBP has made a drop, and they are expected to, they have done enough of pump and dump moves last week in Euro GBP, and they are expected to drop it further downward. So you could see a little bit of pullback or a brief upward stop in the case of Euro GBP, and then subsequently they are expected to drop. And Euro CHF, another European cross, wherein they have been holding around 1.25 to 1.24 area and consolidating here and buying all the sells. And when the traders find that it is a range bound move between 1.25 to 1.24 to 1.26 area, they are inducing the traders to liquidate the longs and turn short, and you come across currently 35 pips negative net change. How? In the case of CHF, it is trading around 96.44. You know that it was trading around 93 area, and from there they gained up to 97 area. Then from there, little bit of drop they have made it, and 96.47 is the ask. 96.38 is the low, 96.97 is the high, 25 pips negative net change is seen. When Euro is showing 2 pips negative net change, CHF is showing 25 pips negative net change, indicating that it is a contrarian move mainly to handle the Euro CHF on the downside before making further rise during this particular week. And in the case of Yen, they dropped it to 82 area and also briefly showed 82 at the lower level, and then currently trading around 83.10, 83.13, 83.9, 82.95 is the low, 83.25 is the high. 3 pips negative net change is seen. When Euro is showing negative net change, Yen is also showing nominal negative net change. You find Euro Yen is showing about 50 pips negative net change. 5 pips negative net change. And in the case of GBP Yen, GBP is showing positive net change and Yen is showing negative net change. As a result, you find that it is showing only about 4 pips negative net change. So they are making a downward act below that of 129 in the case of GBP, and then they are expected to gain the level. Similarly, in the case of Euro, below that of 107, they are trying to hit the stops before making further rise. Then in the case of Canadian dollar, you find that it is hovering around that of 99.32, 99.36 currently. 99.13 is the low. On Friday also around that of 99.07 was the low, and subsequently they made before the non-farm payroll a quick rise to 1.00, then again dropped it. They are consolidating here, and you come across 1 pip negative net change, and Australian dollar is also showing 1 pip negative net change. When both the commodity pairs show negative net change, we know that they are handling the crosses by making contrarian moves. That is why you come across Euro showing nominal negative net change and GBP showing nominal positive net change or flat now. Then also Euro and CHF are showing contrarian move, and so you find that they are busy handling the crosses for the week beginning, and then subsequently they are expected to gain the levels in the case of Euro and GBP during that of the US session. So let us see how exactly today they are expected to act. So let me focus the camera over that of the PowerPoint presentation. The expected market moves for today: Japanese session swing and firm up, nominal firming up or a brief upward stop and could be seen. European session, a brief upward move and then slide towards close of the European session could be seen. And then from the early US session, they are expected to swing and rise towards close move. Once the volume improves, the week beginning false move. Once the week beginning false move is established towards late European session, you will come across more swing and rise moves during that of the US session. At that time, you could find the gains will be very, very quick. So these are all the expected moves for today. Swing and firm up move, little bit of firming up and a brief upward stop and may be seen in one or two pairs above that of the high. Then subsequently, European session swing and slide moves are expected. US session swing and rise moves are expected. So week beginning false move is expected during that of the late European session. When the volume picks up, they are expected to make a downward stop or a false move up to that of the low and then quickly gain the levels. So during that time, one can initiate the long positions. Then they will be able to easily book profit during the US session. They are all safe trades. For that, people need to wait for that market to come either to closer to that of the high or closer to that of the low set for the day and try to take the positions. Then they will be able to earn well. And instead, if they try to take positions out of urge and that they wanted to make some quick 10-20 pips profit and try to take the position in the middle level, then the players might show a downward move or an upward move just to induce them to do the liquidation of the position with the loss. So always understand that the session start and the session close times will give trading opportunities in the majors, and during the mid sessions you can focus on that of the crosses. And when they are closer to that of the low or make a brief downward stop, and in 10 minutes you will be able to understand that they will stop cutting the low or the high. And similarly, during the mid session, you can just try to take the positions during that of the European session or the US session and try to close it in the next session or in the same session itself. Let me go to that of the expected market moves for today. So with regard to the initial lows and the highs, in the case of Euro, 1.286 was the low, and currently the Euro is trading around the middle level 1.29, and they could make a brief upward stop and above 1.2929 during the late Japanese session and then make the slide to go below that of 1.29 during the European session, and you could come across they could make a false move up to that of the low or a brief downward stop and for about a few pips in the case of Euro. And in the case of GBP, 1.5509 is the low, 1.5567 is the high, and Here again, they could make an upward stop and probably make a definite downward stop and below that of 1.55, and during the late European session, probably show briefly 1.54 area and then go up. So this they could do it in order to create the market sentiment, namely the bearish sentiment in the case of Euro and GBP. For that they have to drop GBP, only then the sentiment will be intensified. And if simply Euro is showing below 1.29, people might think still GBP is holding, so Euro may not drop. But when they drop and make a downward stop in the case of GBP, then the fear grips in. Then for that purpose, in order to create the market sentiment, they could make a downward stop and below that of the low, initial low in the case of GBP. As you know, the stop end could happen only for about 30 minutes. So towards close, they could make a quick downward stop and then probably come above that of the initial low during that of the gap time and then start gaining the levels during that of the US session. Then USD CHF 96.38 is the low and 96.97 is the high, and you could come across here as they are making a contrarian move that is showing negative net change in the case of Euro and showing negative net change in the case of CHF. They could again make a false move since it is closer to that of the low 1.9638. Current level is 1.964750 and 25 pips negative net change is seen. And also you find that Euro CHF is closer to that of the low 1.2444 is the low, 1.2452 is the current level. They could make a downward move. When Euro is dropping, they could drop CHF also as a contrarian move. And on Friday, you would have noticed that they made the gain in the case of Euro and simultaneously they gained the level in the case of USD CHF. And then afterwards, holding USD CHF, they dropped Euro. That is how they alternatively make the moves in order to hand across. So that we need to understand. Only then we will be able to find how much depth they will be able to drop or rise. That sort of estimate is possible if you understand the type of moves they are trying to make in the market from time to time. In the case of USDN, 82.95 is the low and 83.09, 83.12 are the current levels and 83.25 is the high. They are holding it in the middle level, still showing about 4-5 pips negative net change. So they could make again a downward move below that of the psychological level 83 or probably a false move up to 82.95 or they may drop it up to 82.91 and then gain the levels. In the case of Australian dollar, 99.13 is the low and I typed it wrongly. 99.27 is the low and 99.81 is the high. Now you come across Australian dollar is showing 1 pip positive net change, so they may not drop further Australian dollar and it could lead the rally on the upside. And 99.81 they could breach, and again during that of the US session we could see above that of parity in the case of Australian dollar. Then USD CAD 99.13 is the low, 99.44 is the high. Currently market is trading around 99.32, 99.36 area. So you find it is closer to that of the high. They could make an upward stop because as you come across in Australian dollar and Canadian dollar, they showed negative net change and gradually they are expected to make positive net change. As you find in the case of Canadian dollar, only 1 pip negative net change is seen, so they can easily gain the levels and continue the contrarian move, rising Australian dollar as well as Canadian dollar. Then after gaining above the parity, quickly again they could drop Canadian dollar and then alternatively gain back from that of late US session or tomorrow onwards. So you will come across more frequently the contrarian moves for the week beginning, and probably till Wednesday they could do this sort of contrarian moves. So we should be prepared for such contrarian moves and accordingly take the positions. The best way to trade is in all the 6 pairs, try to buy near that of the low, so that you'll be able to find during different times the profit coming in the trade, and probably you can quickly close the position as a swing trade for the day. And then subsequently from today, if somebody is taking the position near that of the low, and they can continue to hold it after keeping stop at entry and try to do position trade in this particular month. So with regard to the expected market moves for tomorrow during the Japanese session, they could make a brief downward stop and then start gaining the levels. At Wednesday, they are expected to open upward and continue to gain the levels with swings. And on Thursday, you could come across lackluster moves or slow gains. And Friday, we will come across aggressive gain from that of the Japanese session itself. And probably US session, we could come across very volatile move, a quick drop and a quick rise on Friday. So these are all the expected market moves for this particular week. So let me minimize the PowerPoint presentation and take up the questions which are asked here. Okay, anyhow, Newid has got a question. Based on your evaluation of forecast algorithm, excluding trading strategy for Q4 to then, are you satisfied with the results? No, I don't. I only evaluate the results. I don't become satisfied or dissatisfied and things like that. I find where exactly the problem is and I'll try to fix it. See, there is no point in becoming upset with the forecast or becoming overly held with a forecast, because by becoming very happy or upset, I'm not going to achieve anything. So I have to identify where exactly I have gone wrong and try to rectify. That is the only way. So there is no question of satisfaction as far as a scientific approach is concerned. Still, we will be having the lingering questions. That is how science grows. Then Caesar was reading the expert forecast on FX, and in the case of Euro USD, all the experts are bearish, whereas you are bullish. Can you please give insight into the reasons of the bullish outlook this week? Okay. So there are always two possibilities in the market. One can have a bearish outlook or a bullish outlook. So normally the technical analyst could give the levels in case if the market goes up, it can go up to this level like 1.32. In case if market comes down, it can come to 1.26. So either way, they will be able to give the levels as a technical analyst based on various type of studies of the channels. Okay, using Fibonacci retracement or whatever it is. So there are two possibilities in the market. So of that possibility, the most probable possibility, they try to take it and try to give that analysis. But still, they won't be knowing that definite probability in the market. And also, we have to identify with the greater expectations or the permissible move in the market. So when you want to estimate the permissible move or the expected move, then obviously we have to do different type of analysis with regard to this. And one of the important thing is when the players have dropped, and during the drop, all will be willing to sell. And we have to identify whether they are giving profit booking opportunity for the short sellers. And also for that of the long holders, how they are being treated. So these are all the two methods by which we'll be able to find out whether they are doing accumulation or distribution of the positions. And when they are distributing the positions around say 1.29, then obviously you will come across more drop. But when you do the analysis with regard to the levels, normally they are expected to drop quickly and buy and rise quickly and offload. When the drop was very quick, obviously the forecast expects a rise after that because quick moves or false moves in the market. That is how the forecast analyze and estimate the levels, probable levels with regard to the market actions. So you could come across, as per my algorithm, the rise. Others, I'm not very sure about it because there are two possibilities in the market. People can have two different type of views with regard to future. So this sort of probability bound to remain in every future analysis. It's not only that of the market, also with regard to the forecast on the weather, forecast on the political situations, anything for that matter, we will come across both the possibilities. So we wanted to reduce the level of uncertainty and try to find what could be the certainty with regard to that particular forecast. And in case if the forecast goes wrong, then it is only an estimate. And it can go wrong. There is no hard and fast rule that the forecast has to be right all the time. I try to fine tune it depending upon the market depth and also the type of moves they are making, but still they continue to change the type of moves. So because the market players are more clever than anybody else, because they got the greatest advantage of knowing where exactly the traders have kept the stop. I do not know, or you do not know when you are taking the positions. So they make the moves in the market with certainty. Okay, we can drop from 1.30 to 1.29 in euro with certainty, not based on the overbought oversold conditions, because many might think that because of overbought oversold conditions the market is making a drop and things like that. We have seen so many occasions when the market was showing extreme oversold condition, the market continued to drop further down. At that time, we have to understand that it was the players who are oversold, not the traders. So when the market is oversold, immediately if you try to take a buy, then probably we might be trapped. So whatever be the type of analysis we try to do, every analysis has got its own limitations. That is why technical analysts, including me, we try to use various types of analysis, not only sticking on to that of any one particular type of analysis. And in that process, it leads to the development of an algorithm. Algorithm is a sequence of statistical analysis. It's not non-scientific. It is a sequence of statistical analysis, and out of that we derive a particular level or derive the particular type of moves they could make as the next move. So that is more important. So currently euro is trading around 1.29. I like to know whether it will go up or come down. Accordingly, I will be able to plan my trade. And so when I want to take the position here, even though it is considered as a support, I will not take it because the low is 1.2863. So in that condition, I use the market reading. So when they come below that of 1.29, I'll try to take a buy closer to that of the low. In case if they are not dropping and straight away rising it, I just keep myself calm and tell myself that tomorrow they will again give trading opportunity. So I don't chase the positions or I don't chase the market. So obviously when the market comes as per your expectations, if you try to take positions, you will be doing a very, very safe trade. So my algorithm outlook is that euro and GBP are expected to rise for the first 3 months of this particular year. And probably you might criticize that I was telling that it can go to 1.39 or 1.42 level by year end. And similarly, there are others who are estimated 1.29, 1.26 levels for year end. And in fact, the market has not respected any of those levels on the higher side or on the lower side. So you should be able to understand. So it is not that I alone be criticized, all others are subject to criticism. Last week you mentioned that euro and GBP should go higher before the drop in Q1. And if the drop, you will be reevaluate your view on Q1 and revised view. No, they are expected again. Now the start of the year and this is the second week. So we have to see how far they are making the moves in the month of Jan. Then probably I can review. Before that, I'll not be able to change the view now. Then season. Before you break last week, you gave the level for gold as 1,375. It was achieved. Should one buy at current level or do you see some more downside? So during that of the US session, you could come across some drop in the case of gold and then subsequently they are expected to rise. Balance. It appears there have been a shift in trading zone in euro. No, there is no shift in trading zone. They have been trading around 1.30 to 1.34 level and they just made a extended downward move in order to make a quick upward move. Because if we find there is a shift in trading zone, in all currencies we should find that shift in trading zone. GBP is holding around 1.55 and yen is holding around 83 level and CHF. In fact, from 93 they have come to 96. So even though euro dropped only 100 pips, CHF gained 300 pips. You have to keep all those things in mind. And also Australian dollar, they dropped from that of parity, but again it is holding above that of 99 area. So you don't come across shift in trading zone. And USD CAD, they are just keeping it in order to handle the crosses, which is a thin volume traded currency. So they are expected to gain again the levels in the case of Canadian dollar. In DTPG, do you expect USD, CHF, USD, yen rise when euro and GBP rise? Yes, they are expected to rise as a contrarian move. See, now you find in the live market code page, all the currencies are showing negative net change. Is it not a contrarian move? So, when they make very frequently contrarian moves, understand that they are busy making quick moves in the case of crosses. So, when people are afraid to take positions in euro and GBP because they look very bearish, the traders are trying to take the positions in crosses. So that is why they are handling the crosses more frequently. And even before non-farm payroll, they have been making aggressive moves in the case of crosses. And you know that last Friday I gave that they are expected to make a false downward move and then rise after that non-farm payroll. In the case of GBP, they have gained the levels and held. Only in the case of euro, they dropped it. And you know that euro GBP at that time gained levels and dropped quickly. So by making move in one currency, holding the other currency, they are able to achieve their objectives of earning money in both the currencies. Now euro GBP, you find that it has come to 82 area. So they created all bullish feel in the case of euro GBP and everybody was thinking that GBP is the weakest currency. Now you find it is holding. So what sentiment we had developed last week, it is totally changed. And this, we will not be able to get it from any of the statistical analysis. Because in statistical analysis, we don't compare currencies. We only do the analysis with regard to single currency. Then obviously, we will not be in a position to find why that GBP has become stronger when compared to that of euro. And similarly, why Australian dollar was the strongest earlier and then suddenly it has dropped. So all these moves are mainly depending upon the traders' pending positions. When all traders turn long above parity in the case of Australian dollar, they have to necessarily drop and earn. So as far as the players are concerned, they don't go by technical analysis. Many people think that they are doing it as per technical analysis. Not at all. They go by that of the definite pending positions of the traders. So when the traders have turned long in Australian dollar and gold, then they will drop it. There's no question of sentiment attached there for them. And they only create the sentiment and induce the traders to take position or exit positions. But they are not going by that of the market sentiment. They are the sentiment creators and they are not affected. It is similar to that of the platform providers. The platform providers trade against that of the traders. And when the traders take the position, they are giving to them. Okay, if you want to buy euro, okay, I'll give it you higher. That is how they are doing it. The banks are also doing it. So, whatever the sentiment we try to create, then they are holding opposite sentiment. Where is the question of sentiment prevailing in the market? Then Caesar. Last week Australian dollar was dropped and reason was the flood. Okay, fine. You can use any sort of attribute, you know very well that attributes are being used in the market to make moves. So today when Australian dollar gains, then everybody will forget about the flood. The situation is still getting worse. Okay, when the situation is still getting worse, Australian dollar should have come to 0.98 or 97. It has not come down. This is not the normal level. Australian dollar used to trade around 0.83 to 0.8789 level for a long time, and it was never held closer to the parity or above parity in the history now, in the past 15-20 years. So you find that all the attributes are used just to make about 50 pips, 100 pips swing. If you trust that, then you have to go with that. I cannot help it. Gold is also below 1,400. What reason could that be? Absolutely no reason, sir. The reason is the traders are long, so it is holding below. The traders are short, it will hold up. That is the only factual reason. All other things are excuses, according to my understanding. Then Jack. For Euro USD, do you see a move lower, and if so, what level? So probably they can go closer to that 1.2863 level. That's what I explained, that either it could make a false move up to that low, or it can just make a brief downward stop and below that and go up. But it doesn't mean that you can do a sell and buy trade when it comes closer to the high, and when they are making an upward stop, and at that time you can watch and do it, but it will be high risk trade. Instead, calmly wait for a quick drop to come to low, then try to do a buy and sell trade, because the players are buying now. You may not be able to understand, but I am able to read it, and I am giving this. If you trust this, probably you can do that sort of trade, buy and sell trade, when they are making quick drop. You know that quick moves are false moves in the market. By end of that week, what level do you expect Australian dollar, euro? So I'll be giving these levels in the forecast. Probably you can just go through that, because it's being updated weekly in FX Street. So I'll give the levels there. Then Jack. The top of Euro USD going to 1.282527. Is that unlikely? Then do you see a bottom of 2862 low? According to my estimate, they have done the week beginning false move, a quick downward stop in the case of euro, and we have to see during the day, and also late European session how far they are going it, we have to see. But I'm not expecting a very big drop. Then Arvind. But stop ends are part of the game. No, I cannot foretell that. For the simple reason, if they find cluster of stops below that of the low, they will just make an attempt and hit the stops and earn the money and then quickly rise. So nobody will be able to say that whether there can be a stop and below the low or not. And even if it happens, simply it will be discounted as noise. But if you keep a stop, your position is closed. In euro, is it advisable to book profit in hedged position, sell position, and take buy position to average higher level at 1.36? Okay, when you are asking about the trading strategy, and if your equity is limited, don't commit more positions. You try to keep stop at entry. And once it is closed at entry, then try to keep another hedging order 30 pips below and trail it up to that of the original hedged level, so that when they gain quickly, you will be able to see the rise and just rise the level of the hedging order. In case if you try to book profit, you should be able to keep another 30 pips below a hedging order. Near that of the low, you can do it, but still, if it is hedged, you have to understand that, how to handle it. That I explained in my trading system. Kindly go through that. So traders elaborate how to handle the hedging. I explained in my trading system webinars. They are being listed in a market trading blog. Kindly go through that, please. Do you expect Australian dollar to go above parity by? Yeah, it's most likely to go above parity. See, sir, I am based out on Australia, so get an early start. Have been observing that once the highs are achieved, it is safer to sell and get out before European session. Not all the time. Probably once the high is set and not cut for more than 30 minutes, you can try to take a sell, but try to keep stop at entry. The going is good, probably extend it. In case if they are making intentional move on the downside, then you will be able to maximize the profit. But you will have either way trading opportunities when you start early for the day. Because if they form the low like euro, then you could have taken a buy position when that new low was not breached, and that was psychologically below that of Friday low, and you can take a buy position around that and keep stop at entry, and when the going is good, then trail the stop and probably close it near that high. They may not be able to make very big move excepting on certain days. So sometimes when the market open positions are built up, especially in that spot market as well as the derivative market, then they will open high with 100 pips upward or 100 pips lower and things like that. Now you come across, it's only a second week, so they will make subdued moves and accumulate the positions and later on gain the levels during the week. So probably on Thursday and Friday you can do such trades, taking a higher level sell or taking up a lower level buy depending upon the type of move. In case if they make an extended move the previous day, the next day they intend to make an intentional move. At that time you can do a sell and buy trade. In case they make an extended move on the downside, then you know that next day they are expected to make a upward move, intentional move. Always after the extended move, they will make the intentional move the next day. Follow that and try to take positions since you are sitting in Australia. Please, direction of the Euro CHF. They are expected to gain the levels after that of late European session. Next, in the beginning of the webinar, do you expect a swing and rise? I will show that PowerPoint presentation. Do you still think that Euro will hit before the Japanese session? Hit high. Yeah, Euro could make a brief upward stop and above that of the high and then make the slide during late European session. That is what expected as per the forecast. Then, yeah, how is Australian dollar perform today? And Australian dollar, they could 99.27 is the low. Currently, it is showing about 8 pips negative net change. When Canadian dollar is showing flat net change, so obviously you could come across a subdued move in Australian dollar. During late European session, there could be a downward stop along with that of GBP. At that time, try to take position. Probably below that of low, but I don't think they will go below 99 area in a deeper way. Probably 1 or 2 pips could be possible if they find stops below that 0.99, the psychological level. What do you expect of Euro in the US session? I am expecting the rise during that of the US session. Then what do you expect of USD Singapore dollar? Singapore dollar is expected to gain the levels. So let me go back to that of the PowerPoint presentation. So expected market moves, swing and firm up moves are expected during Japanese session, and swing and slide moves are expected during European session. Swing and rise moves are expected during US session. So the week beginning false move could happen as a dip during late European session. Then with regard to the initial lows and the highs, none of the lows and the highs have been breached, so you can understand that the market volume is relatively less. They are making nominal swings. They could probably act towards close of Japanese session above the high or below the low in certain currencies and then trigger the market. So I'll take this opportunity to thank everybody who have come here and also Apex Trade for recording this webinar and displaying the website for the benefit of those who are not able to attend the webinars. So Tomorrow again we'll meet for Asian session live market analysis. Until then, bye.